Hey, what's up, YouTube? Gonna go live on Facebook. All right. All right. Good. Good on Facebook. We're good. Ladies and gentlemen, we're gonna do some pre-earnings analysis. eBay, Xilinx, Triple M, and Twitter are going to be reporting tomorrow after the close and the day after in the morning. So we're going to prep you nice and early. We're going to give you my opinions on that, as well as share for you the results on all the names that I have given you prior on these pre-earnings analysis Newsbeat shows. Also, the most consistent, but truly consistent, earning strategy that you will ever see in your entire life, and I'm going to show you that as well. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many great things to talk to you about today. Let's just get right to the point. Before we start this show, you are holding me, Mark Melnick, and T3 Live, harmless, not responsible for anything portrayed on this video. And if you do not agree to that, besides for just making me cry on the inside, you must leave this video immediately. I will be heartbroken as you leave. But if you do agree to those terms, you may continue watching. Okay, let's just get right to the point. So, we showed you some names the other day, and it's sort of new here, and I'll be offering it to you guys for free. I'll be offering it to you guys for free just for watching the show. An entire earnings season review of names in which are fundamentally analyzed, where the charts actually have nothing to do with it. And even though that I am not romantically involved in these names prior to the report, I am very romantically involved after they report. But let's just get to the numbers real quick and then I'll get into the other ones. So the other day I went ahead and I did give you, and it might be hard to see here, I gave you Biogen long, Hog short, Hasbro long, Lockheed long, UPS long. One of them worked out of five. Four of them failed. However, if you bought in at the closing price, and there's ways to manage the strategies, of course, on the open, like you use, 5-minute candles, and you would have actually made a ton more money if you did that. But I didn't want to get into any complexities. I just wanted to basically go from closing price to opening price with the bias. So Biogen obviously would have been your big winner, and with $100,000 bet, and you could divide these numbers by 10, or if you're betting a million to trade, multiply it by 10, or if you're doing 50,000, divide it by 2, or 150,000 times it by 1.5. You could do the math on all these potentials, but if you did $100,000 worth of shares, you would have made a total of $11,250.66, considering that you did buy in your shares or short your shares at the exact closing price with closing amount in the morning at the exact opening up price. So I think what is it? Market on close and market on open. I think those are the MOC and MOO. But either way, $38,696 would have been your big winner for Biogen. Just so you know, not to sound stupid, but if you did any bet, for example, even if you did $10,000 bets and options, and you took like basic Biogen calls, like I'm not even talking about the silly ones way out of the money, just like normal ones, like $2, $3 options, like you would have been up like almost $500,000. And this entire earnings season, if you lost on probably every single one of my ideas from this point on, let's say I give you like 40 more ideas and you bat 0 for 40, if you did options in all of them, just straight calls or puts, and considering you lose 100% on every single bet from now on, you would have made money this entire earnings season. It doesn't even matter anymore. So to not go down that direction, we will use common stock as for my example. Just wanted to point that out because you wouldn't have lost 100% on these names, but to argue and even say you would have lost 100% on these names, um, when you watch like dollar options go to like $50, it is like, it's like 5,000% gain. When you start going to silly numbers like that. So you basically would have made 38,000 on Biogen. You would have lost 6K on Hog. You would have lost 16K on Hasbro. You would have lost 3,000 on Lockheed. You would have lost 2,200 on UPS for a grand total of 11,200, a profit of $11,250.66. Okay, enough said. We'll keep updating that as I promised you before. We'll keep updating it as we do these videos. All right, so let's go into what I am watching today. We're going to start off with eBay. In eBay, company that I absolutely loved. I was a huge believer in eBay. Yeah, I actually was buying eBay calls into their January earnings. I absolutely crushed it. I love eBay. I love everything they stand for. Everything makes sense. I am no longer bullish on eBay. And I showed you the silly example of the taxes. Like, I guess it depends on like what state you live in. But like if you go, for example, and you try to like for example, if you go ahead and you try to do it, there's just this obnoxious state tax that's attached to it, like the digital tax, and it gets to the point where it pretty much makes it not worth it anymore. Pretty much makes it not worth it anymore to buy a lot of things that I buy on eBay. So that's number one, losing me as a customer. Excuse me. Whew. Budem zdarovya. Now, just taking a look here on eBay, you know, looking at their last earnings, they said they're going to make 62 to 65 cents versus 63 expected, 2.61 billion to 2.66 billion versus a consensus of 2.68. Here's my honest thought. I don't think a lot of it took into account these digital taxes. I don't know about you guys, but how many people order less from eBay or Amazon ever since the digital taxes? Hmm? Lost sound? You guys can hear me? Thank you. How many people? You got sound. Okay, good. Right? You stopped. You slowed down, Amy. Kelly, you too. Laxbro, Anna, Dave. You order the same amount? When were there digital taxes? Exactly. So, I mean, I started ordering less, and they were looking to miss on revenues anyway. I just feel they're going to miss on revenues even more. So, to come out officially, I will be bearish on eBay. We could just, again, I don't know how this thing will gap or whatever. I obviously have to add the names from the other day, which I haven't yet. Snapchat, Whirlpool, BX, and General Dynamics. I'll make sure I'll add that, but I'll just add these for now. So eBay, I am officially bearish on. Next on my list here, we are going to go into, where the heck did I write that? Xilinx. We're going to go into Xilinx here. Now, a lot of these semiconductors are getting destroyed. In fact, you're probably going to walk in tomorrow and see all these semiconductors getting destroyed. Thankfully for Newsbeat Live members and myself, I did walk in with some AMD puts that I bought right at the close today, just based on a simple technical setup. And the fact that Texas Instruments is getting destroyed right now after hours, TXN, just down massively at the moment, the semiconductors are going to get crushed tomorrow morning. So that's AMD, NVIDIA. You could just probably see any of these names after hours. NVIDIA getting destroyed after hours, AMD as well, Xilinx, all these things are getting destroyed. But, with one T, but I feel a little bit differently on Xilinx. I think Xilinx will potentially be the diamond in the rough. They're getting a little beaten up now. I think they're going to come in and I think they're going to beat on revenues. I think Xilinx is going to come in and they're going to just beat on revenues and they're going to surprise Wall Street. And yes, while the semiconductors are definitely hurting, look, you're going to price some of that in tomorrow on Xilinx. Let's just be honest. It's currently printing $94. It's down about 2 points after hours right now, just on Texas Instruments. I mean, this is getting priced in already. I know people are very negative on semiconductors now with Texas Instruments reporting. I'm officially going to go on the record and say that I will be bullish on Xilinx. Moving on to Triple M, ladies and gentlemen. I mean, one of the most wonderful monthly charts you'll ever see. One of, until recently, until like 2018, where it started heading lower. But I mean, this company has just been a powerhouse. Stock got as high as 259.77, 259.77. Now trading at 167.54. So, what are my thoughts here on Triple M? Well, I'm bullish on Triple M. I think they're going to come in ahead of earnings per share. I think their EPS will be high. I think their revenue will be high. Um, I do want to mention last time they gapped the stock up and then sold it off. The stock is now trading lower since that last positive earnings report. I think it's in a very wonderful place. I'm not even saying they don't sell it off. And stay tuned if you want to see the most consistent earnings strategy, by the way. And no, it's not what I'm doing right here. I'm actually going to show it to you and give you at least some empirical evidence from today. So Triple M, um, officially going on the record bullish. And last but not least, we're going to look at Twitter. It's reporting Thursday morning. Again, I'll always give you these videos. I'll always do these videos the day before you could play like options into them. So if they're reporting Thursday morning, I have to give it to you on Tuesday so you could potentially play it on Wednesday before, the morning comes in. And of course, I'm rating it based on common stock. Rating it on options would be kind of silly at this point because again, the Biogen call would have just made your entire earnings season, and I don't want to make it easy on myself. That would be too much of a cop out to just come in and just shamelessly say, oh, you could just do it like that. I'm not. What kind of an ass would I be if I did that to you, right? So let's go ahead and talk about Twitter here. To me, Twitter is notorious for sucking on earnings. They just always have bad revenue projections and it's scary to me, and part of me wants to be bullish on Twitter, like half of me wants to be bullish, but I just look at the numbers and it induces nausea, like it induces nausea. It's like, what is the universe? Like they have these things like the universal formulas to vomit. Like they have those universal formula. Like look it up on Google if you think I'm making this up. They have the universal formula to vomit. My universal formula to vomit is looking at past Twitter earnings. Like to me, like if I ingested a toxic poison and I needed to get it out of my digestive system, I would just put up old Twitter earnings reports and I would expunge and expel everything inside me. Hope you're not eating dinner and enjoying this show while you're eating. If you do, thumbs this video up because I'm awesome for at least thinking about you, and it's the thought that counts. But just going back to Twitter right now, um, I don't know. I don't know. Their earnings per share always sucks. Last time they did 5 cents versus the 19 expected. Like, how did you miss by that much? Oh, what were these analysts thinking? They beat on revenues last time. Wouldn't surprise me if they beat on revenues this time. I'm just overall bearish. I'm just not convinced that Twitter does a good job advertising. Let me just ask you guys honestly. How many of you guys have never clicked on a Twitter ad in your life? In terms of Twitter ad, I don't mean a tweet, but like an advertisement from Twitter, a promotion from Twitter. How many of you guys have never clicked one in your life? I have a Twitter account. Never. Amy, Walt, Suzanne, Ron, Tom, Jack, Bill, Larry, Kelly, Jose, Ken, Anna, Dwayne, Dwayne, Carl, Stockman. No? Mike. Yeah. So here's the point. How are they making money? How are you making money if nobody wants to click your ads? For whatever reason, they just never entice me to click their ads. I don't know. So it makes me skeptical on their revenues. As a result, I will officially be bearish on Twitter. Now, I want to show you something here. And what it is I have the handwriting of like a famous brain surgeon, which basically means like I write like a 3-year-old with arthritis. So basically, I was watching these eight earnings names today. This was from this morning, and we go over them in the Newsbeat live room. Biogen, Hog, Hasbro, Lockheed Martin, UPS, McDonald's, Procter and Gamble, and Ameritrade. I know I'm having a good day when I'm able to read my own handwriting. Like, if you think you have a bad handwriting, you might not. But use what I call the Melnick test to find out if you have a bad handwriting. If once a week you don't know what you wrote, or every so often you notice that you don't actually understand what you wrote, you have a bad handwriting. That's that's me. Like, I have a bad handwriting. So with that being said, we did videos, we did so many videos on something called the VWAP reversal, and it looks kind of cute. You're like, oh, what is this? 81.5% effective for the month of September. It's only 4 steps. You choose an earnings name that gaps, whatever. Let's say an earnings name gaps down, you're looking for a reversal, you're looking for a long. If a name gaps up, you're looking for a short. You're looking to do the opposite of the gap. You wait for a 5 minute to close above the VWAP if you gap down, or below the VWAP if you gapped up. You, in this case, if you're buying, you buy through the break at the top of the next 5 minute bar for a quick, profitable scalp. 81.5% effective. I know people love to use the word consistency on the internet. I have yet to find any consistent strategy outside of people who are net sellers of options. Unless you are a net seller of options, nobody bats over 70%. Nobody. It's insane. Unless you're doing like put spreads and collecting premium and things like that, you're not batting over 70% just with any strategy that you do. And that is something that I said has to be done because, again, there was a scientific study saying that everybody is going to have good and bad events around them in life. Unless you have 7 good events for every 3 bad events, you are going to be suffering psychological toxicity. So what I said is I took that study and I transferred it over to trading and I said, well, why can't 7 trading events be good for every 3 bad? I mean, everybody knows you're going to have winning and losing trades. Take the worst traders in the world and they have thousands of winning trades and worse losing trades, right? So I wanted to show you how this strategy would have worked on every single name today, and I'm going to fly through here because you have to see it with your own eyes. All right, so I'm going to start off with Biogen. We actually took it short today. We actually took it short today. So, or whatever, I bought puts, a bearish bet, taking it short, right? So right over here, you see the stock closed at 305. This is it's all 5 minute charts, by the way. So if you're wondering what time frame I'm using, 100% of them are on the 5 minute charts. Just focus on the orange piece of dental floss that I have crazy glued to my screen. And you'll notice that right here, the stock closed at 305.28. The orange piece of dental floss is at 311.21, as you can see on the left-hand side. You simply short the stock as soon as a 5 minute bar breaks down because Biogen gapped up. It's a VWAP reversal. You're looking for the opposite direction. Short through 305.11. Look at that beautiful move. I covered. I bought out of my puts right over here on this candlestick as it was flushing down, and it just got decimated. It just got decimated. The $6 puts went well over $20 today. You could have sold them over $20 today. The $300 puts. We bought in at 6. Nice, easy trade. That's one VWAP reversal. This is the only VWAP reversal that I caught today. I called some out, others out. Truth is, I was having personal problems here, family issues and whatnot, and honestly, my head wasn't in the game. I had to wake up 4:30 in the morning. Again, personal issues. Son's awake. You know, you have a 4-year-old awake at 4:30 in the morning. I don't know how to spell my name correctly during that time, and it just shows you the power of lack of sleep and how it affects your trading the next day. But still, made money on Biogen. But let's take a look at Hog. Hog gaps up, right? VWAP reversals a short, closes below the VWAP right here. You're looking for the next break through a 5 minute bar low. You short here through 38.97. 15 minutes later, 38.11. Your short worked beautifully, or your puts exploded, however you traded it. Next is Hasbro. This one we called out in real time as well. Gap down. Closed right here at 102.38. The VWAP was at $100.83. Simply buy through the top of the candle here, which is 102.90, and the stock got as high as 104.73 before dipping down. Easy for a quick scalp trade. And you might be saying, like, what? How do you know? How do you know when you should do a quick scalp trade or hold? Because I spell it out for you in step 3. So on Biogen, I went from what, around 303 to 297, like 6 points. It dropped another 17 points after I got rid of it. Some people held a lot better than me. For me, I approach it to lock in money. I like being consistent. I like taking the money. 6 points for me is a 2% move in Biogen. Nothing to scoff at whatsoever. Nothing to scoff at whatsoever. Going back, as you can see, Hasbro 102.90 to 103.84 jumps $1 on one 5-minute candle. That's your trade. That's it. It's over. You don't have to think too hard. Lockheed Martin gap down, so we're looking to go long. Shot up off the open. See, this is one of my earnings names that I considered a failure because I called it long, and even though it went pretty green here, it gapped down. So again, if you played it with a 5-minute low bottom, if you played like with additional strategies and managed it, I mean, you would have gotten much better numbers from the things I showed you. But just going back to it, Lockheed Martin, you're looking for a long, closes above the orange piece of dental floss. You buy through the top of the bar here through 372.59. That's it. Maybe you caught, 3 points. I'm not even saying you had to catch more and more and more and more and more. Maybe you caught 1, 2, 3 points. That's it. That's it. Trade over. And by the way, I'm not cherry picking any of these earnings plays. I'm literally just going through my entire earnings list right here. That's the box that I keep all the earnings plays I focus in on. UPS, gap down. You're looking for a long. Closed right here, bunch above the orange piece of dental floss, above 113.30. Closed at 113.66. You simply buy through 113.70. Easy money. I'm not saying you rode it all the way up here, $3 higher. I'm saying maybe you caught a quarter, 50 cents, 75 cents, a dollar, $1.50. That's what I'm saying. Look at that. Look at that follow through. Look how beautiful. Next was McDonald's, Food, Folks, and Fun. Right over here, closed above the VWAP for the first time. We're looking for the first close above the VWAP. Right over here, between 945 and 950. Closed at 203.49. The VWAP was 203.14. And again, you buy through 203, you buy through the top here, 203.65 goes to 204.43. I'm saying that's your trade. That's it. You don't have to sit and watch and hope it keeps running. That was an explosive move. Your calls would have popped beautifully. So many members caught that one today. Procter Gamble, you're looking for a short because the name gapped up. First close, this one actually is funny because it closed at 123.67. It doesn't matter in this case, but the VWAP was at 123.67, so closed on the VWAP. And if you're sitting there and wondering if that counts, no, you have to close above or in this case below the VWAP. So this actually bar wouldn't count. Not that it would have mattered because it wouldn't have triggered off anything. This is the first bar that closed below the VWAP, 123.51 versus 123.65. You simply short through the next 5-minute bar break, which would be right over here. You'd be shorting between 10 and 10.05 for the break of 123.50. Look what a beautiful $2 drop. And again, I'm not even saying you caught that $2 drop. I'm saying maybe you caught 50 cents. Maybe you caught 75 cents. Maybe you caught $1. Okay? That's what I'm insinuating here. Last but not least, the one that failed was TD Ameritrade. Right over, it gapped up, so right over here, closed below the VWAP, 38.39 versus 38.40. You could have shorted right here through 38.27, would have gone 9 cents in your favor, and then just probably stop you out somewhere here because I doubt you would sit there and hold it, and it was kind of grindy. So I would actually mark that one as a failure on that. And if you followed my methodology, you were batting 7 out of 8. 7 out of 8. What is wrong with 7 out of 8? 7 divided by 8. You took all those trades today, you're batting 87.5%. So when I come to you and I show you that it's 81.5% effective on these earnings names even, they're easy trades. You don't have to make trading difficult. People tried to share with you all this nonsense on Wall Street. All this nonsense on Wall Street that you have to follow 1,500 different parameters and a bunch of lessons and a bunch of memorization of candlestick formations. And like, I get it. Candles, they all have their time and place. Like, I'm not even downplaying it. I'm just saying, ladies and gentlemen, making money trading is going to be as complex as you want it to be. It's going to be as complex as you want it to be. You know, maybe I'll be happy. You know what? You know how I consider my trading? I'm happy with a bunch of small singles. The problem is when you're batting 43 to 57%, you need big home runs, otherwise you'll be losing money. Perfect example of that being 110% true are the earnings picks that I took, which I would never want to do in a million years in terms of the pre-earnings analysis. I don't do these things. It's too easy to make money on the intraday. Why am I going to take a coin flip overnight on a strategy when I could just do the VWAP reversal in which I showed you? And yeah, if Biogen didn't knock it out of the park, you would have been down money on my trades. Yeah, you're up 11,250 on $100,000 bets and multiply it or divide it based on the amount of money you want to put in. But by no means am I looking at this and saying, oh, look what a great call I made. I'm not. It effing sucked. I wouldn't want to be part of these trades. If you told me, I'll put it this way, if you told me yesterday that this was going to be the result, I wouldn't put a single penny towards any of these names. Like, let's say I didn't know which names would gap up or down. I just saw the result. Yeah, then I'd buy a million. I'd buy, 25 to 50 million dollars worth of Biogen calls, and I would become a billionaire overnight. No, I'm not talking stupidity like that. I'm talking like logical. I wouldn't do these trades. This is batting 20%. Now, it's a small sample size. Look, I get it. I chose 5 names. It's something that I wouldn't base a sample size on. But just to give you an example, I'm just doing fundamental analysis for you guys and just showing you how simple it is to just take common stocks and analyze it. And again, 20% and you're making money. You know how much psychological toxicity I would have suffered if I was in all these trades today? And this is why you need a home run when you're batting bad. You know why people talk about needing to hold trades longer? Because their strategies suck. And you might be saying there, I'm gonna downvote Mark. He doesn't know it. No, ladies and gentlemen, there are times to hold names for a long time. There are times to swing names. Look at our favorite stock of the year. Look at our the Newsbeat #1 stock of 2019 in Seago. Look how beautiful that thing performed from January. It's trading at 571, 5G stock of the future. Look at our #1 dividend play of the year. AWK, American Waterworks, opened up closed at $88.77 on the first day of trading this year, went as high as 129.89. Do you know how many Newsbeat Live members are millionaires because of stupid little swing ideas like this? So don't get me wrong, there is a time to sit there and hold. What I am saying is when it comes to the earnings season, you are just sitting there and you're like, bling, heads, bling, tails. That's what you're doing. There are no earning strategies that are batting over 70% unless you are a net seller of options. Let's just be honest. Let's just cut the nonsense. Let's cut the smoke and mirrors out. Let's cut just showing you the numbers. That strategy was awful. And yeah, you do need to hit home runs when you're stuck in the 43-57 paradigm because otherwise you'll lose money. So you're being forced to hit home runs. It's like the tortoise and the hare. And if you don't sprint ahead fast, you're going to be passed out on the road, and a car's going to run you over, and you're going to be roadkill. I hear rabbit tastes like chicken. Let me know how you taste doing that strategy. Me, I'd rather be the tortoise, except I'm almost like a Super Mario Brothers tortoise. I'm almost like the turtle from Super Mario Brothers. It's like din 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 din, and I'm just walking real slow, like single, single, single. But you know what happens when you jump on top of the turtle and you see the shell and Mario kicks it, it goes fast? That's when I hit a home run. So it's like single, 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 home run, single, 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 home run. That's how you trade consistently. That's how you trade consistently. So yeah, I do enjoy giving you the fundamentals of these earnings names. Some people do well on them. Like, I get it that you could have made money if you took them all. But at the same time, I don't want to lie and pretend and fabricate that that is the way you make money consistently with no psychological toxicities, with no stress. How many of you guys are in overnight positions out of curiosity and you're sitting there looking at your phone? You're sitting there looking at your phone all day. You got to make sure you have to see where the after hours prints are. And then you wake up early and you have to see the stock and you have to see what it's doing. Do you want to live that life? See, I slammed my phone so hard that my webcam was like, Mark, what the hell did you just do? That is how people are living their lives. And that's not what I'm referring to, Judy. I'm referring to people who are taking the earnings overnights. And yeah, there are a place for overnights, and I make the majority of my money. I probably make the majority of my money through long-term overnight positions. I don't deny that. But if you're inside this earnings season, be smart about it. There is a way to take advantage of it. The way that I showed you right now with the VWAP reversal, I'll put it this way to you. Why would I trade even, let's take my best example. Why would I take my Biogen call long when I could walk in the morning? And I didn't take much of this at all today, actually. I was having a very whatever day. And instead of dropping, $10,000, $20,000 in options in Biogen and hoping that it gaps my direction, why wouldn't I just wake up in the morning and put that same money towards a VWAP reversal short here? Something we called in real time in the Newsbeat live room today. Why wouldn't we just do that? Wouldn't that be easier? Wouldn't that be your money better spent? Unfortunately, you're rolling the dice. And the truth is, if you're if you're in that 43 to 57% paradigm, you're going to walk, whether you walk out with money and you made money, God bless you, I hope you did, or you lost money. One thing is for sure, with 100% certainty, you're walking out with psychological toxicity. And that's going to grow on you. And you're going to pay for that dearly at one stage of your life. You're just not sure when. And there are smarter ways to trade. There are better ways to trade. There are ways to achieve consistency. And none of the strategies that I've seen, again, short of people who are net selling options, going short options, no strategies I've seen are conducive for that sort of success. So tomorrow, ladies and gentlemen, we're going to come in and I'm just going to tell you exactly what's going to happen in the Newsbeat live room. It's going to be easy. We're going to take all the sexy names that reported tonight. We're going to take all the sexy names that are going to report tomorrow morning, and I'm going to look to do VWAP reversals on them. And then what I'm going to do is I'm going to show you the names that I chose, and I'm going to show you which VWAP reversal names that I actually played. I'm actually going to just go through and show you the names that I actually played. And yeah, I might lose on one, but on average, for every one I lose on, I'm going to make on four. So, with that being said, maybe we hit a home run tomorrow as well. A lot of good news flow coming out, a lot of good calls. It's not Pokemon, you can't catch them all, but we're going to do our damn best. You want tomorrow's levels today? Maybe you were impressed that we called the top of USO yesterday to the penny when we gave you 1144 and you want tomorrow's levels today? Okay, here you go. Enjoy. Here are the levels for tomorrow, October 23rd. Algorithmic support and resistance levels. They don't always hit, but when they do, they tend to be right 70% or more of the time. That's it. Yeah, I'll be wrong on some of them, sure. I'll be right on more of them, sure. That's consistency. So with that, ladies and gentlemen, thank you. Thank you for making the Newsbeat Live Room T3 Live's #1 largest and fastest growing trading room. Happy trading, make money. I'll see you guys tomorrow morning on the Newsbeat Live trading broadcast. Have a wonderful evening.